Mark, let's tie this up to all the books that you've written, the knowledge that you're imparting to young investors, to what's happening in the current markets right now. If you have to look at India as a place, where would it be in pecking order? Because I know you have been absolutely positive in terms of India. In fact, the last time we spoke as well, you did mention you're looking at a new fund where majority of it will be India focused, but you were looking at a couple of approvals to come through. Where are you on it? And then we will discuss how to tie both of these together.
Well, India, of course, is number one in my view. I want to invest a substantial portion of this new fund in India. And of course, the reason for that is that India's got so much things going for it. First of all, young population of 1.2 billion, a government who is digitizing and trying to raise the standards in the country, a more unified country coming together. All these factors are so important and make India really tops in my view. And by the way, one of the things we look at, of course, is economic growth. If you invest in a country like India, which is growing at 6 or 7%, you will know that the companies in that country, in India, for example, would be growing at double that rate. That's usually the case. And you can look at a 7% growth and you probably have 14, 15% earnings growth in the companies, in good companies. So that's what we're looking at. We hope to get approval to invest in India within the next month or so, and then we can begin to really fill the portfolio. Right now, we have 50% in cash, so we're ready and waiting for this opportunity in India.
Sitting on a 50% cash for the new fund, waiting for that opportunity in India to open up, and that's really a strong statement coming in there. But Mark, if you have to look at MSCI India, if I'm looking at data from the 7th of April to now, you have MSCI India Index, which has underperformed global peers. Secondly, if you have to look at inflation in India, that is at a multi-year low. So if you have to tie this up and the role both of this will play for the markets, which will be those pockets where you're seeing value?
Well, first of all, if you look at the growth rate, as I mentioned, it's still very, very good. Some people say it would be 7, it would be 6, but nevertheless, 6 is triple or at least triple that of the developed world. So that's number one. Number two, I believe the Indian rupee will get stronger going forward. And that's an important factor that you have to look at. And then thirdly, I believe that at the end of the day, you're going to see more and more global investors coming into India. As you know, American manufacturers have used China as their main supply source. That will change more towards India going forward. So there's going to be a lot of direct investments, not only portfolio investments, but direct investments in India, which is going to be very important going forward.
So taking the new opportunities into consideration, and I'm sure, I mean, there were a couple of stocks we've spoken about earlier as well, where Mark is invested in, from a Vodafone to Persistent, APL Apollo, Wari Renewables. I know there is some portion you mentioned that you have offloaded, but majority of it is what you're still holding in India. Where are the other pockets? Would you say these are the names where you will probably look at increasing your stake with the new fund, or will you look at other names? And if so, which would they be?
I'm looking at other names, and particularly in computer hardware. I believe that, of course, India is already very preeminent in software. They're exporting software all over the world. So India is doing very well on the software side. But going forward, I believe on the hardware, chips, semiconductors, for example, and general hardware for computers and other electronic equipment will be very important in India. And that's where we want to look more carefully and perhaps invest in some new companies that are involved in that kind of activity.
Mark, would these be from the small cap or the mid cap space?
Probably mid cap. We want to have liquidity. Liquidity is very important when you're running a fund, as you know. So we would probably go to the mid cap. Companies that have, in US dollar terms, 1 million daily turnover or more.
So you're saying tech-driven, hardware-driven IT companies is what your next bet is for the new fund with India. Apart from this, any other sectors that you would be betting big on? Because the opportunity that comes in, a lot of people are talking about renewables. A lot of people are talking about where consumption will be a booster as well. Do they fit your portfolio?
Of course, with 1.2 billion people, India consumer market is going to be growing very rapidly. Already it's growing rapidly. It's going to be growing much more as we go forward, as per capita incomes go up, which they are. So consumer is very, very important. So we will be looking at that sector. As you notice, a company like Nestle has been doing very, very well. And I believe there are many other consumer companies that we'll be looking at.
Mark, would you be looking at a consumer company which is focused on rural India or which is focused on urban India? Where would your bets be?
Probably urban India, because as you know, there's mass migration from the rural areas into the urban areas. So urban consumption is going up faster than rural consumption.